Now, you may be thinking that I look very young and sprightly, but in fact I'm old enough to remember a time when multi-asset funds were all the rage. Today, perhaps not so much, and indeed, in particular, multi-asset income. But here to remind us all of the case for investing in multi-asset income funds is Morningstar's Senior Manager Research Analyst, Tom Mills, who joins me now in the studio. Tom, thanks for being here. What's the case, broadly speaking, for investing in these funds right now?
So I guess generally investors might choose to invest in a multi-asset income fund as a one-stop shop for getting income from a diversified portfolio. I guess right now versus perhaps recent years, there was a protracted period before 2022 where interest rates were low. It was a low yield environment, and these funds had to work quite hard potentially or take risk to generate a high level of yield. But what we've seen since the start of 2022 is central banks have hiked rates, bond yields have risen significantly, and that's changed the fixed income landscape quite considerably. So for multi-asset income funds, what that can mean is that they have more levers to pull potentially. So government bonds, high quality bonds might be more appealing than they were. That gives them more levers to pull, and a better opportunity set potentially to meet their income objectives.
Perfect, makes perfect sense. And you brought with you two examples of such funds, one a balanced fund and one that's slightly more cautious. So tell us about those in turn.
So a fund with a more moderate risk profile, Premier Miton multi-asset distribution fund. It's in our 40 to 60% equity allocation category, which gives a good indication of what its typical exposure to equities looks like. And it's a fund of funds that's managed by Premier Miton's multi-manager team, which is led by David Hambidge, who's a highly experienced investor. And this fund is looking to produce a reasonable level of income and some capital growth. The team also manage a similar fund that aims for a monthly distribution and a slightly higher yield, the same for quarterly distributions. It gets its exposure, it invests in equities, bonds, and also some property and alternatives, and it gets its exposure through, it's a multi-manager fund of funds approach. So the managers invest in their preferred funds in areas, as you might expect, there's quite a focus on equity income funds on the equity side. And on the fixed income side, there's a focus on some high yielding areas like credit, high yield, and some emerging market debt. And then they also have some exposure to listed property and some alternatives. And there's a fair bias to the UK in this portfolio as well. It's a fairly high yielding, high dividend yield equity market compared to global markets. And the fund has done a good job over time of delivering on its income objective, and I guess it's got a fairly strong performance track record against its peers as well, and it's rated bronze.
Lovely. And fund number two?
So this is a little bit different. The 91 Diversified Income Fund, it's a more cautious approach, and the portfolio managers are choosing individual securities to build the portfolio to meet its objectives. And it's in Morningstar's 20 to 40% equity allocation category. When the managers think about this fund, they think of it potentially as a replacement for a bond allocation or as a complement to a bond or a cash allocation. So perhaps more of an absolute return approach where they're aiming for around a 4% yield that's going to be providing most of the total returns of the fund. So potentially a more stable return profile. And they're looking to control volatility, keep that relatively low, minimize drawdowns, and while focusing on that 4% yield approximately. So over time, it's been a fairly resilient performer in falling markets. It's a fund that we wouldn't expect to keep up in strongly rising markets necessarily, and the managers will hedge some of the equity exposure to help them control the risk. And it's managed by John Stopford and Jason Barbara Sheen, they're specialists in multi-asset income investing, so they sit within 91's wider multi-asset team, who help them with aspects like security selection, but they're dedicated to this multi-asset income approach. And John Stopford was the architect, essentially, of this strategy.
His baby. Excellent. Okay, well, thanks very much for that, Tom. If you want to read more about our fund research work, you can check out our regular updates on morningstar.co.uk, or indeed any of our international editorial websites. Until next time, my thanks again to Tom. I've been Ollie Smith for Morningstar.